Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Wednesday, April 23rd, 2025. This is Nelson John. Let's get started. It's a big day on Dalal Street. At least 27 companies, including LTIMindtree, IndusInd Bank, Bajaj Housing Finance, Tata Consumer Products, and Thyrocare, are set to announce their Q4 FY25 results today. This earnings season and management commentary will manage the near-time market sentiment, said Vinod Nair, head of research at Geojit. Other names releasing results today include Syngene International, Rallis India, Dalmia Bharat, and Canfin Homes, among others. Over 100 companies are expected to report this week, including Reliance, HCL Tech, Axis Bank, Nestle, HUL, and Maruti Suzuki. Meanwhile, Indian markets continued their winning streak yesterday. The Nifty 50 closed at 24,167, up 0.17%, while the Sensex gained 187 points to settle at 79,595, marking a sixth straight day of gains. Still, analysts like Ajit Mishra of Religare broking see limited upside ahead. With Nifty nearing its 24,250 target, some consolidation is likely, but the tone stays positive. Stick to buying on dips, especially in stocks with strong earnings momentum, he said. All eyes now shift to the Q4 scorecards and the stories companies will tell beyond the numbers. The centre is reviewing all green energy contracts awarded to Gensol Engineering Pvt as concerns mount over 7,000 crore rupees worth of critical infrastructure projects facing delays or risk of default. The company led by the Jaggi brothers is under fire after SEBI accused it of fund diversion and forgery, barring it from the securities market. Many of Gensol's solar EPC and battery storage contracts were awarded by public sector giants like NTPC, DVC, and Singareni Collieries. The centre is looking into every aspect, including the possibility of rebidding contracts if project execution looks unviable, a government official told Mint. At stake is more than just project timelines. IREDA and Power Finance Corp have lent Gensol over 1,000 crore rupees. The MNRE and Power Ministry are now closely monitoring the situation to avoid these loans turning into bad debt. PFC has already filed a complaint with the Economic Offences Wing, alleging falsified documents. Meanwhile, internal investigations are ongoing. SEBI warned that the governance lapses could ripple across Gensol's entire clean energy infrastructure order book, shaking institutional trust at a critical moment for India's green energy ambitions. The centre has no plans for further equity infusion into Vodafone Idea, Union Communications Minister Mr. Scindia confirmed in an interaction with Mint following the 36,900 crore rupees debt to equity conversion. He also dismissed any talks of merging Vodafone Idea with BSNL, calling it conjecture. There will be no more conversions as that would turn the company into a PSU, he said. The government, he added, has already extended significant support to the sector and sees no need for additional relief. Even as the regulatory dues moratorium ends this year, Scindia pointed to a resurgent telecom sector with operators spending upward of 4.5 trillion rupees in capex and ARPU rising. BSNL is also making strides, adding 5.5 million users in 6 months and targeting full rollout of 100,000 4G towers by July, after which 5G expansions may follow, reports Mint's Jatin Grover. On telecom manufacturing, the government plans to set up domestic plug-and-play zones backed by fiscal incentives, potentially starting in Madhya Pradesh. As for Satcom, Scindia said licenses will be cleared once firms like Starlink meet compliance. We want them in, but there will be no subsidies. The market decides pricing, he added. Mutual fund investors are feeling the heat, not just from market losses, but also rising fees. A Mint analysis shows that 62% of direct equity mutual fund schemes raised their total expense ratios, TER, between September 2024 and March 2025, even though many saw their assets under management, AUM, grow. Under SEBI rules, TER is supposed to go down as a fund's AUM increases. But there's a loophole. No rule says when TER can be raised, as long as it stays within limits. It could be a profitability adjustment or a preemptive move against redemptions, said a fund manager. Direct plans saw more TER hikes, while regular plans, which pay out distributor commissions, mostly cut or kept theirs steady. Experts say AMCs may also be leveraging unused TER headroom now to buffer for future volatility. SEBI had proposed in 2023 to shift TER slab from the scheme to the AMC level to close loopholes. But that plan is on hold. For now, investors may want to watch fees hikes as closely as fund performance. Apple's India play is heating up. Analysts say the company could nearly double its revenue to $15 billion in FY26, up from $7.9 billion in FY24, powered largely by iPhone sales. If momentum holds, Apple will break into India's top 5 smartphone brands by 2025, said Tarun Pathak of Counterpoint. It's a big leap for a premium brand in one of the world's most price-sensitive markets. Apple is projected to sell over 15 million iPhones this year, gaining more than 8% market share, reports Mint's Shovik Das. But it's not just iPhones. The real magic is in Apple's ecosystem play: AirPods, Macs, watches, and services. Deals with firms like Wipro and Zoho to deploy Macs are part of a quiet enterprise push. Still, there's a caveat. India remains a high-volume, low-value market for Apple, warned IDC's Navkendra Singh, pointing to the country's limited local value addition. Key iPhone components, chips, OLEDs are still made in China and Taiwan. Unless India moves up the value chain, it risks staying a low-cost assembly hub, not a high-tech manufacturing power. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode that will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a wonderful Wednesday.